So in this video, I want to teach you a smart money technique that I use to take advantage of the markets whenever I am trading. So basically, this video is meant for people who don't have any edge on the markets, that are looking for a strategy, a method they can use right away on the market that works, that is proven to work. And of course, through this video, I'm going to show you it. I'm going to first illustrate it for you on the diagram that is on your chart, and then afterwards we're going to go into the live chart to show you how this works. Okay, so I'm just going to break it down, so make sure you watch till the end. Do not skip any parts of this video. Okay, so first thing and foremost, we want to be always on the 4H time frame. I know time frame is very important to everybody that's watching this video. 4H time frame, I like it in the sense that it's good for spotting structure and the market order flow. So what is order flow? It's just another word where we say we can spot the order of the market, or rather the flow of the market, which is meaning the nature of the market or the trend of the market. So for example, let's say you were on the 4H market and you spot that there's an order flow where we have higher highs, we have lower lows, we have lower highs, lower lows, lower highs, lower lows, and lower highs. So the market is simply creating the nature of a bearish trend. Therefore, we can say that is a bearish order flow. Again, if you were to spot a bullish order flow, you are going to say we have higher lows, higher highs, higher lows, and higher highs, so forth. I believe I've taught this in my previous videos, but if you don't know it, I will zero in more as well when we go into the chart. Now, a lot of you guys are well acquainted with smart money, where basically we take the previous structure in terms of when the market has created lower highs, we want to sell high in order to depreciate with the market and make profits. And one of the ways to do that is to spot a supply on the market. So in this case, I want to teach you exactly how I usually spot the supply on the 4H and still not have my stop loss way bigger than it should be, that I cannot afford the trade itself. Okay, so usually we know that the market would use the lower high, the last lower high, and it pulls back and it takes that supply zone and it sells off in order to create a new lower low. The case where it pulls back now and you're interested in getting a trade that imprints right here at the lower high on your 4H time frame, but then the stop loss appears too big, you're not really sure about this trade, you want more confluence to it, it kind of messes you up. Well, I got the answer for you. So we're going to exactly do that. So let's say this is the pullback that you were seeing here, right? And this was the impulse, or rather the supply that the market had created. So the pullback is this one, sorry. So okay, we have the pullback, we have the impulse, we have the pullback. Now I want you to go to a smaller time frame like your M5, okay, as well as your M1. We're going to do it right away on the chart, but I'm just laying the foundation here. Once you've went to your M1, M5, you want to look at how the structure was sort of behaving on in that time frame as it's pulling back. So let's say just slightly imprinted. You want to go right away to this chart time frames M1 and M5 and see the behavior. So as you can see, the market, let's say, of course, it has to trend bullish on those lower time frames, and it has imprinted that touch. Once it has done that, right, you want the market to sell off a bit. Once it sells off, we want to apply more smart money techniques to get a little bit more in terms of confluence and entry confirmation. So for example, if we had this last part here, let me just take a tool to draw. If we have the last part here being your higher high, and the market, of course, higher low, higher high, higher high. So if the market breaks this higher low right here, it's initiating that we are now in a new trend. In smart money, we definitely call it change of character. You may hear other YouTubers saying that's a market structure shift. I don't like using the word. It's just a tongue twister for me. I'm not sure because of my vernac. or the way I just articulate English words. Okay, so we have a market structure shift. I just zoomed in now so that you guys can see market structure shift or change of character. Once the market breaks that, it's most likely to pull back, and you will find either a demand level, I mean, you will find a supply level, okay, and that's where you want to enter your trade off. So if the market pulls back to that supply level right away, that's where you're going to sell. So you want to sell here instead of you would have sold here, and you would have put your stop loss way above, like somewhere here, instead of having your stop loss somewhere around here, and you still aim for the higher take profit, where if the next structure was here, then you're aiming for that. Does it make sense, guys? Now I want to go to the chart and really get to show you this even more on how it takes place on the markets. So that's exactly what we're going to be doing. Now I'm still on the 4H time frame, and this was I'm just going to show you here what took place. Okay, and as we can see here, we can see the order flow of the market. We can see higher highs, higher lows, and we can see that higher high violated this one. Okay, and once it violated it, we can see the market actually selling off. Okay, it sells off, lower lows, lower highs, lower lows. Okay, so now if somebody now were to be interested to see, okay, I want to see a supply on the market. When the market pulls back, I want to catch that trade. How can I do that? Here's a supply here. This trade was taken by a student. I'll put the screenshot over here. A student did actually post this setup, was asking for confirmation. So I was inspired to actually make this video for some of y'all. He did get it right because I taught him right within the mentorship. But for some of you guys, what if you don't know because you don't pay for mentorship, or you know? So I want to teach you here on this YouTube, right? So this was the supply, and the market fell in there, and of course sold right away. Would if you now took the trade over here, sold over here, and put your stop loss? That's a lot of pips, especially given that this trade was on Nasdaq. That's a lot of pips that that individual would be willing to lose, because everybody can sort of highlight a supply like this, right? Everybody can do that, and everybody can say, okay, I'm going to enter a trade here. But let's say really this is a very good trade opportunity because you're trading according to the order flow. But if you're going to enter small, then you're not really going to capitalize a lot on this trade. Look at it, it only says 1:7 right now. Okay, let me just put it there on the next structure. 1:7, and the stop loss, it's about 50 pips or 509 points. That's a lot of money that it's on the table. If you're gonna be basically too scared to take this trade. So what I would advise, as soon as the market touches right there on that zone, you go to you can start to scroll all the way down to your 5 minutes, and that's exactly what we're gonna do. Okay, in this case, this actually took place on the 1 minute. So I advise you go to the 1 minute, because then that's when structure is also quite changing quite early right there. Okay, just gonna pull back to it, and I'll show you right away on how that played out. There we go. Okay, so as you can see, this actually hit on that supply, as we could see it on the 4H time frame. So instead of our stop loss there being very high, let's break down structure. So look at that, we have that higher high, the market took it. So that was break of structure. Okay, it creates a new higher high right here. The market fails to violate that new higher high. And of course, it had already, when it was violating, or rather it was being resisted by the market, it couldn't push any further. It created for us a new higher low over here. Okay, sometimes it doesn't give you this, so it can be different scenarios. You want to back test in order to get full, full advantage of how the strategy actually just plays out. So with a break of structure, with a change of character when the market sold off. Look at now when it pulls back to a supply right here. And this supply one now could have actually took their trade right here, put your stop loss just slightly above. I always recommend slightly above, not exactly on the zone, slightly above. Leave room for the market to breathe. And now the take profit could have been according to the 4H. Okay, so if we go back again to the 4H time frame, you will see something now. There we go. Okay, it's so small, it doesn't even show it. Let's just adjust it quickly. There we go. Can you see that? Yes, you can take partials along the way, especially if you're still a beginner. I mean, you won't get the confidence to just execute trades like this where you are holding it all the way. But this is just one of the methods. If you have the patience to hold it, you have a small stop loss, I believe you have nothing to lose, because even if the market kicks you out over here, you want to lose a small amount. I mean, the stop loss is just 9 pips, 9 pips instead of compared to 50 pips on a Nasdaq. Can you see that? This is 9 pips. The take profit range all the way, when I zoom it out here, when I zoom it out all the way here, that is 335. This is a 1 is to 37. I'm not saying you're going to get trades like this every day, but surely if you just wait for the market, have the patience, you're gonna get such trades. This is just an approach that I easily use on the market. It works regularly. Even if we can just take another buy example here, you can go ahead. I don't want this video to be too long, just for you to catch the knowledge. But I want you to back test this and tell me in the comment section how well it works on the markets. How are you adapting to it? By the way, it's not limited on working on Nasdaq. Just because I made the example on Nasdaq, it can work on other pairs with bullish structures and bearish structures as well. So, but it's all according to practice. As I said, just to simplify it, the 4H you want to pick the order flow because it's quite simple. Then you go to the 5 minute or 1 minute to kind of really confirm your entry with more smart money techniques. I just hope this video really has impacted your life. If it has, please do subscribe to our channel. We have more education like this for you guys to really start succeeding in your trading life and see results. Thank you so much for watching. See you on the next video. Of course, if you're looking for more education, I would advise the videos that are appearing on your screen right now. Thank you.